Yes, so having completed the entire audit syllabus, it is now time for us to go through a revision, and revision becomes a very, very important part of the entire study pattern. Reason being, this is going to help you retain the subject and you'll be able to write in the examination really well. Okay, so the way in which we are going to do the revision is going to be different. I will not be taking the every topic in detail, pick up from the beginning till the end and do the revision like that. No, we are going to do a smart revision, wherein what we are going to understand is that the structure will change. The way in which we have actually taken the entire subject, that is all the chapter 12. Okay, that is we have all together 14 chapters. And if you talk about core auditing chapters, we have chapter 1 to 12. So out of them, what I have done is descriptive type of questions from where we are going to have, we'll be picking up first for the purpose of revision, so that we'll be able to pick up every concept in detail and discuss it again. Then we'll take up the simpler ones. And finally, the last two sessions, we will be picking up the questions from the examination kit, the exam kit that we have. That is the actual examination questions that you get. And from there, we are going to solve it so that you'll be able to get a clear understanding of what kind of questions can we expect in the examination, more so ever the language, and most importantly, how you respond to them. The approach becomes very important. When we began the subject of audit and assurance, okay, it was very clearly I had highlighted that out of all the subjects in this particular section, that is when you talk about the applied skill level, out of all the subjects, one of the difficult subjects which students really find it to be difficult is audit and assurance. Trust me, subject wise, it is not difficult. What really is difficult is the approach. And that was the very first thing that I began with. And today also in the revision session, I keep my point the same. That means this subject content is very easily understandable. You can imagine, you can understand, you can actually visualize and understand the concepts because these are practical oriented. However, retention becomes a very big problem. Therefore, the approach for preparation is very, very important. Through the revision sessions, I'll help you how to retain it, how to understand which points have to be repeated and learned again and again, and also some areas where already you know the topic very well, so we'll not spend much time on it. Okay, as you already know that this particular subject, the entire structure will be theoretical part and the international standards on auditing. In applied skill level, we do not have much importance given, or will not say importance. A lot of content of international standards on auditing is not been given. Rather, only the key requirements of the standards have been given. So we'll not have too much of emphasis on it. Rather, the content would be very, very important. That is the actual theory that we have. Okay. So what we do is we are not going to access the study material again. We will have a separate document altogether, which I'll be giving the access to you. And wherein you'll understand, first of all, I'll begin again with what the entire syllabus is containing. Okay, just for a quick understanding or the overview of the subject. Then again, once we will have an understanding of how the exam pattern will be. Then I'm going to begin with the framework. That means I'll be telling you exactly in what sequence the revision will happen. And we are going to follow the revision classes the way I am telling. Reason being, the way in which I've structured, the learning will be quite understandable and very easy also. And the parts where you have to really mug up or where you have to actually read continuously again and again, we'll take it at the end of the sessions. But the conceptual, the descriptive part, which the students find very difficult, that part we are going to take up first. Okay. And this is revision, so you can't expect that it is going to go very much in detail. But yes, when you look into the main course, when you go through the lectures available at our website, you will see that every single topic, we have done it exhaustively. That means every single line, every single topic, every single concept of audit and assurance, we have picked up in detail. And I have explained each and every concept too much in detail. So you will see that in this particular session, you'll see that the concepts are just touched upon, and I'm going to give you a kind of a summarized approach. But when you look into the main content, when you look into the way the classes have been actually done, you will see that every single topic has been picked up, and detailed discussion, you could actually call it to be a comprehensive discussion of every single aspect has been covered. So when you look at the entire course, the subject is 100% covered, and it is going to be such an exhaustive one that you will be understanding it in 100% clarity, with 100% clarity. So these are revision sessions where I'll be picking up on every single concept. I will pick up all, but yes, we'll have a summarized approach which will help you recollect the entire subject properly. Okay, so let us get started. I will share the PDF with all of you, and then we'll have a discussion of how the revision sessions will actually happen. Okay, so first of all, as I told you, I'm going to begin with the discussion, again, the primary discussion, the preliminary discussion that we had in the very beginning. That is, I'll tell you first how the subject looks like. The subject is broadly classified into these parts. We have the first chapter, which is going to talk about audit framework and regulation, which is going to cover all the basic ideas regarding what is audit, what is assurance engagement. Then we are going to understand what is external audit, corporate governance, professional ethics, and ACCA's code of ethics and conduct. So this particular part we'll take up in detail when we come to this respective topic. Okay. So this is the first one, audit framework and regulation, which is having in detail 4 different topics that we are going to discuss upon. Then we have a very, very important one, which is planning and risk assessment, where we have 3 chapters to be discussed: risk, planning, and evidence. Then we have the third one, which is internal control, which talks about 2 important topics. Chapters are covered here are systems and control and internal audit. What I have done is the Kaplan study material, the entire study material I've classified, dividing the understanding the subject overview. Okay, so that when you look at the subdivision, the understanding of the subject will be very, very clear. Then when you talk about the fourth one, we have the procedures. So in audit, we have a procedure to be followed. That is, once you do planning, you do risk assessment, then you test the controls, then you're going to check everything much more in detail. And the detailed checking, we call it to be substantive procedure. So we have a very important discussion called as the procedures topic, which is one of the lengthiest topics that you have for your syllabus. Then the last leg of the audit, that is before we give the audit report, we'll be having to do a review and reporting, under which we'll be studying 2 different chapters again, completion and review and reporting. Basically, completion and review and reporting topic are all, a lot of standards are covered here. So international standards on auditing, many of them have been included as a part of completion and review and reporting topic. Okay, then. The last 2 are, I would not call it to be the core audit topics, but yes, especially the 6th one is not the core audit topic. It is available in every subject of applied skill or the professional skill level, where you'll see that this is a common topic introduced. This is going to talk about how the examination pattern will be, how we require to use the software. Most importantly, why it has been the examination pattern, because it is going to develop your employability and technological skills. So that's a very, very simple, I'll call it a vanilla topic, a very simple to understand. So it's not a core audit one. So we cannot call it to be only audit perspective. Yes, it is applicable for ACCA as a whole. Then you talk about summary of key ISAs, the last one. Now, looking at the word itself, you understand it is a summary of all the international standards and auditing, which you will come across through all these topics. So when you talk about the first one, second one, third, fourth, fifth, everywhere, looking at the respective topics, we are going to talk about the corresponding international standard on auditing. Just to give a simple example, when I'm going to talk about evidence topic, all the international standards in auditing, that is ISAs regarding evidence, will be covered by this particular topic itself. So like that, throughout the syllabus, every single chapter is going to talk about few standards which are connected with those topics. So everywhere we have it a part discussion, few covered in risk, few covered in planning, few covered in evidence. So it is available throughout the syllabus in a haphazard manner. So what the material has done is only they have introduced one more chapter wherein all these international standards on auditing, wherever they are, all of them have compiled together and they've given a separate chapter altogether as a summary of key ISAs. So this is not a separate chapter. It is a consolidation of all the international standards that you see throughout the syllabus. Okay, then. So that is the broad framework of what your subject includes. Then you have the question paper pattern, which is quite understandable to all of you. We know it is divided into 2 parts. We have section A and the section B, wherein in section A, you'll be having 3 10-mark case studies. Okay, that means altogether 30 you'll have. So every case study is going to have 10 marks each. So there are going to be 5 objective kind of questions. Every question will carry 2 marks. Okay. And then when you have the section B, that is going to be purely descriptive, which becomes a very difficult part for the auditing students, because this part they find it difficult because everything has to be narrated, has to be written. Okay. So descriptive part is where you're going to give a theoretical answer. Okay. So this becomes a difficult part, but trust me, if your approach is right, if you know how to read the question correctly, this also you'll be able to tackle very easily. Okay. But many students have a misconception that your preparation should be concentrated only on this particular part and this we can manage. No. Understand, in the subject like audit and assurance, if you really want to score, your preparation for this has to be really well. Okay. So your target of answering should be here. This total 30 marks, you have to try to get maximum scoring here. Okay. Because here there's a scope for you to lose marks, or maybe you'll not be able to frame sentences and all correctly. But this particular area, trust me, you'll be able to take the marks quite easily. And obviously, we don't have all negative marking and all of that. That is not a part. So because of that, if suppose a particular question you do not understand or you don't have the answer to it, then you can do the elimination criteria also. So best option could be selected. So see that this particular part is taken care of very properly. Do not take it lightly because it is MCQ will handle it. No. Whenever you're preparing, your focus should be on MCQ type of questions also. Reason being scoring one in the examination. I would rather say in order to score really well, more than this part has to be concentrated very well. This is important for scoring. Okay. Then moving forward. Okay, now how we are going to take up the sequence. Okay, that is a revision, how we'll be having it. As we know that the classes are going to go for continuous period now, and you'll be seeing that every single class I'll be picking up a particular topic. Okay, and topic as in this is not going to be the way in which the study text is providing. This is the way in which I have bifurcated the syllabus, which I gave just now on top when I was talking about the content. I have bifurcated the syllabus into A, B, C, D, E. Correct? So based on that, I'll be covering the syllabus. So first, I'll be talking about planning and risk assessment, wherein, if you can remember, I spoke about risk, planning, and evidence as a topic. Okay, so these three topics will be taken in one go, wherein I'll be taking every single aspect from there and pick up and discuss in detail. Then we talk about the next one, internal control, where we talk about systems and controls and about the internal audit. Then we talk about procedures, where we are going to discuss everything regarding the test of details, that is substantive procedures. Then we have completion and review, which I told you is the last leg for audit. That means whenever we end the audit, when you're going to give the audit report, there are some more things the auditor is supposed to do, which is considered to be completion and review. Okay, here is basically we talk about how review is conducted and how the auditor actually prepares the audit report. Can he prepare the way he wants, or do we have standards for it? Okay, so that is what we talk about in completion and review. Then we talk about the basic concept, that is the first one, framework, where I spoke about ethics, where we spoke about code of ethics, fundamental requirements of the external auditor, what are the different types of assurance engagement, limited assurance, etc. So all of that, the basic concepts will be covered where in this topic. And then at the end, we are going to pick up the questions from the exam kit. Okay, so exam kit becomes very, 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 very important. Reason being, this is the real input that you are going to take as a part of revision sessions. This will enable you to understand the kind of questions. You will be able to understand the way the questions are drafted, the way in which you're supposed to respond to it, the way in which the language is to be required to be written and all that. What should be your approach? What is required to be written? What should not be written? Everything you'll be able to understand only through the exercise of this. Without a practical understanding of the questions from the exam kit, without actually practicing it, trust me, however good your concepts are in all these 5 topics, if the 6th one is not done by you, this entire effort will turn out to be a failure. Okay, so because of which this practical understanding, this practical hands-on experience on all these questions is the most important thing that we are going to do as a part of the revision session, the highly recommended one. So when I do this particular part, see that you are taking it very, very seriously, because that is the actual thing that is going to be most important as a part of revision session. Okay, so as I told you, so the first class is going to be about planning and risk assessment. Then we take internal control, procedure, completion and review, framework and questions from the exam kit. That is going to be the way in which the revision will be taken. You can trust me blindly on the sequence, because there is a reason for me to choose the sequence. You will be only understanding when I finish all the 5 topics. Only then you'll realize why it was done like that. Okay, all right. So let us, without any further delay, begin with this topic of planning and risk assessment. Okay, now, again, just for a reminder to all of you, these are revision sessions, and only because of it being in a very summarized manner, and only because it is going to be in a way you should get the main concepts and the key idea again correctly, you should be able to recapture, remember everything again. That is the purpose for the revision, because the exams are nearing and you should require a quick recap of everything. But when we do the main course, when you look into the main syllabus, the main content delivery, the subject has been given in full, and each and every line, I actually mean each and every line of the study text, has been picked up on, understood, interpreted, and studied really well. Okay, so this is purely focusing on revision part. Do not try to see that I'm understanding the subject as a whole with revision. That is never possible. You are revising. retaking it again. That means you are reevaluating it. It is not going to be that first time you're doing the revision directly. That cannot happen. So the full subject is available in full understanding, exhaustive, comprehensively. It has been covered. These are revision sessions for recapturing, quickly understanding and remembering everything. All right. So with this, let us get started with planning and risk assessment. I will not be referring to the study text, okay, because that will become difficult for us to access, and taking on each and every page and then routing from page to page, it's going to be very confusing, and the content there is going to be very heavy. So because of that, what I have done is I have created a synopsis of every topic. This synopsis is so much, basically, I won't even call it synopsis. It is the way in which I've picked up every single concept. Okay, and bringing in all the important concepts, I will read out the heading and then give the explanation that is required with respect to that particular concept. So with this, what will happen? We will not read the textbook again, which will become very boring. And what will happen is that without having the content readily available, if you look only at the heading, check and understand if you're able to recapture the things or not. Okay, this will be a very good exercise, a very good way in which you'll be able to understand whether you're able to retain or you're not able to retain it. Okay, all right. So let us begin with the first discussion that we have, that is about planning and risk assessment. This topic is extremely, extremely important for descriptive type of questions. So section B, when we talk about 220 markers questions and 130 mark, there this becomes very, 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 very important. Okay. So planning and risk assessment. So in the study material that we have gone through during the regular classes, it talks about the chapter 5, 6, and 7. So from the study text, if you want to correlate where we are exactly, it talks about the chapter 5, 6, and 7. So chapter 5 is risk, chapter 6 is planning, and chapter 7 is about evidence. Okay, now let us first begin with the chapter 5 that is going to talk about risk. Okay, now in risk, these are all the topics that we have to cover. Along with that, there are certain standards that have been touched upon in this particular topic. Like you have ISA 315, you have 320, you have 520. So these are all the standards that are going to be picked upon in this particular topic. Okay. So we are basically now talking about the top chapter risk, which is a very, very important discussion for examination, very, very important. And I strongly recommend all the students to have the proper understanding of this chapter, because you could genuinely expect questions on the descriptive side from this particular topic. A very, very important area for exam point of view. Okay. So let us begin with the first one. Now, what is the meaning of the word risk? Now, risk basically, it is defined as the auditor will end up giving a wrong opinion. So when the auditor has a risk, that is a risk of giving an inappropriate opinion. So when you talk about the auditor giving an inappropriate opinion on the financial statements, that means when they are modified, okay, when you are supposed to give a modified opinion, you are ending up giving a true and fair, or vice versa. That particular idea is called as risk. So the risk that the auditor will give, or a situation where the auditor will give an inappropriate opinion, we call it to be what? Audit risk. Okay. So when you talk about ISA 200, this is the beginning standard. The first standard in the series that we study of 200 is ISA 200, which talks about overall objective of the independent auditor and conduct of audit in accordance with the standards, so international standards on auditing. This standard says that the auditor has to obtain a reasonable assurance to bring the audit risk to an acceptable lower level. So the audit risk has to be brought down. That means you have to do every possible thing to bring this risk down. That means you should not end up giving an inappropriate opinion. The chance of you giving inappropriate opinion should come down. Okay, that is the meaning of the word risk. Now, what is the component of the audit risk? Now, audit risk basically has three components. Okay, these three components are inherent risk, control risk, and detection risk. Now, what is inherent risk? This risk is always going to be present. So looking at the kind of organization, looking at the entity where you're going for audit, looking at the environment, the kind of industry it is operating, the policies that it is following, the financial reporting framework that is adopting, the industry, the competition, the environment in which it is operating, it is very obvious that there is going to be some risk always going to be present. This risk is going to be there. Okay. So the susceptibility of the particular transactions or the balances, that is the P&L account items or the balance sheet items, to an error, okay, to a risk that is considered to be inherent. It is unavoidable, it is going to be there, correct? Now, because of these inherent risks, which are always going to be present, the management will apply certain controls to prevent these risks or to avoid this risk. Those are called as internal controls employed by the management. Now, sometimes the controls could fail operating, or maybe the management has forgotten or ignored or avoided a place where risk is there and they have not put the control. So either the control is missing or the control is inoperative. So in both the cases, that element we call it to be what? Control risk. A risk that the controls will fail to operate. And then you have detection risk. Detection risk is nothing but you can understand it is visualizing. That means after you check all your inherent and control risk, you will then start looking into all the P&L account items, the balance sheet items, and you start doing a detailed checking. During the detailed checking, sometimes you will not be able to detect a misstatement. Why? One of the common reasons is we do audit based on sampling. So what happens is when you're going to do sampling, suppose if there are 100 transactions, you will check 20. So 80, okay, could have misstatements and this went undetected. This went undetected. So this kind of risk is called as what? Detection risk. Correct? So what happens is audit risk is basically made up of three components: inherent, control, and detection. Got it? So you have inherent risk, unavoidable. Control risk, even after putting the controls will fail. Detection risk is the procedures adopted by the auditor while checking the account balances, transactions, everything. He's unable to detect. So that is called as what? A detection risk. Okay, then. Now, what is the relationship of the components? Now, which are the three components? Inherent, control, and detection. Okay, now, when you talk about inherent risk and control risk, these two risks are together called as risk of material misstatement. Okay, now this part of misstatement is from the management's point of view. So whether audit is going to happen or not happen, whether audit has started, not started, nothing to do with the auditor, this risk comes from the management. So first there is inherent risk, then the management puts the controls and the controls also will fail. So in that case, there is going to be a risk of material misstatement, which is coming from where? The management point of view. Detection risk comes from which point of view? Auditors, because this is depending upon the auditor's procedure. So one is from the auditor's point of view, other is from the management point of view. Understand? Very important. What is the relationship? The relationship between these three components is that risk of material misstatement and detection risk should be inversely proportional to reduce the audit risk to an acceptable lower level. Understand? Audit risk, we have to try to bring it to a lower level. It is impossible for us to eliminate the risk. Never we are going to check 100% of the transaction. You look into the companies like Apple, you look into companies like Amazon and all. They have so many transactions in a day, in an hour. So is it possible for you to check each and every transaction? No. So obviously, never there is going to be a point that you're going to give an absolute assurance. You're always going to give a reasonable assurance, because of which risk cannot be zero, but you have to bring risk to an acceptably lower level. So for that, what you have to do is you have to create inverse relationship between risk of material misstatement and detection risk. That means when the auditor will look into inherent risk and control risk, and he says, yeah, both are not good, that means risk of material misstatement is high. If risk of material misstatement is high, your detection risk should be low. Detection risk low means you have to check more. If you check more, detection risk will come down. Correct? So if the risk of material misstatement is identified, then you choose a larger sample size. So when you choose a larger sample size, your detection risk will come down. And basically the overall audit risk also will come down. So there has to be an inverse relationship between inherent risk, control risk together and that of detection risk. So inherent risk and control risk together will give you risk of material misstatement, and risk of material misstatement should have inverse relationship with detection risk to make the audit risk to come to an acceptable lower level. Clear? All right. Then, so the 3 points covered are risk, components, and relationship. Very, very important discussion. Then we have misstatement, meaning very simple. What is misstatement? We always say the auditor has to look into for the financial statements to be free from material misstatement. So misstatement is something that is wrong. Now, when you talk about something that is wrong, it could be maybe amount. It could be presentation could go wrong. It could be disclosure which could go wrong. Okay, anything. So whether it is amount, presentation, disclosure, what was supposed to be and what the management has recorded, these two should ideally match. Suppose means what financial reporting framework, what it is asking. Okay, and what the management has actually recorded. If these two match, we say there is no misstatement. But if these two do not match, we say it to be what? A misstatement. So the auditor has to ensure that whatever the management has recorded, whatever the management has presented, disclosed, everything should be as per the applicable FRF. And if it is not as per the applicable FRF, we call it to be what? Misstatement. Clear? All right. Then, now here when I spoke about components, I spoke about three components: inherent risk, control risk, and we spoke about detection risk. Now, one example I told you that in case you choose a sample, okay, then detection risk will be there when, suppose out of 100, if you have chosen 20 samples and these 20 samples are all correct, but the actual misstatement are in the remaining 80. That means you chose a wrong sample. So this also happened because you detected, or some of the mistakes went undetected. So that is a detection risk which happened because of wrong sample. And this kind of wrong selection of the sample, we call it to be what? Sampling risk. And what is non-sampling risk? That means risk is there. Inappropriate opinion only you are going to give. But the reason is not going to be wrong sample. The reason is going to be what? Maybe there is wrong interpretation, or maybe a particular area got omitted by the auditor. The auditor could not understand a particular area is risky. There could be some omission of information from the auditor's point. Okay. Or maybe the analysis of the evidence could not happen correctly. So any other reason could be for auditor to give an inappropriate opinion. It could not be because of choosing a wrong sample. So that is called as the non-sampling risk. Okay. So detection risk could happen either because of choosing a wrong sample, or it could be for any other reason, which we call it to be non-sampling risk. Then next important point in the topic is regarding professional skepticism. Okay. Now, professional skepticism is one of the very important parts of audit. This is the attitude of the auditor. It talks about the quality of the auditor. Now, whenever we do the audit, okay, whenever a ACCA goes and performs the audit, obviously, if suppose he comes across any risky area, if he comes across any unusual transaction, if he sees all the transactions are in the range of 1 lakh or maybe $100,000, $200,000, suddenly there is one which is a very large number. Obviously, this will bring a question in his mind. Now, tell me, as an auditor, are you going to simply be numb and not look into what is the problem or what is the reason for this? Or are you going to continue the audit just like that? Obviously, you as an auditor, you're required to keep questioning whenever there is a doubt. You have to be doing critical assessment as and when there is a doubt in the mind of the auditor. So whenever there is some contradictory audit evidence, when two audit evidences don't match, when there is unusual circumstances, when management is not giving a proper response, quick response, then there will be a doubt coming in the mind of the auditor. So whenever the doubt starts coming up, the auditor is required to develop a questioning mind. So this attitude of the auditor to do critical assessment, raising questions whenever he comes across some critical situations, that attitude of the auditor, the concept is called as professional skepticism. Correct? Okay. Then a very important part of this topic, which is materiality. Okay. Now, materiality in audit, very, very important. Reason being, every time when you talk about audit and we give the definition, we say that the auditor is required to ensure or required to obtain an assurance that the financial statements are free from material misstatements. That means as an auditor, okay, I am not bothered or I'm not actually concerned about misstatements which are not material. Materiality as such means something that is going to impact the decision making of the users. Economic decisions of the users could get affected by that particular item. Maybe the financial statements become totally misleading because of those particular items. Those are considered to be material. So we have ISA 320, which talks about materiality in planning and performing the audit. So looking at the name of the standard, we understand materiality is decided at the time of planning also and at the time of performing the audit also. Okay, now, suppose if you're talking about a particular company, so when you start doing the audit, always we begin with plan. Obviously, whichever activity, forget audit, any other in your personal life also, take the example of you preparing for your examination also, everything is well planned. Without planning, if you do anything, it is going to be an utter failure or you will be ineffective, inefficient. Correct? So plan is a very common thing for every activity and audit is seriously a very big responsibility. So planning is going to be there. So when the plan is done, the auditor is going to fix a material level. So suppose if for a particular entity, the auditor believes $100,000 is material. Looking at the size, on many other criteria are there for which you're going to choose the materiality level. You'll apply a benchmark. For example, profit could be taken as a benchmark. You could take assets to be the benchmark. You could take turnover to be the benchmark. And you'll apply a percentage on that, 1%, 5%, 6%. And you'll come to a materiality figure, number. Then based on all these calculations, you pick up a number. Suppose $100,000 is considered to be material by you. Now, when you start doing the audit, any item where there is a misstatement above $100,000, that will be material for you, which you'll consider for evaluation further. And any amount which is going to be below $100,000, it is going to be considered to be not material, where the auditor is not going to perform the further audit procedures. That materiality, that is $100,000 in my example, is called as overall materiality. Materiality for the financial statement as a whole, which we pick up at planning stage. But then understand, suppose if I fix correctly $100,000 only to be my material level. Suppose if that only is considered by me. Okay, if that only is the fixed thing by me, that yeah, this is there. There could be a possibility that some numbers below that, like 99, okay, 98, okay, 97. These all numbers, okay, obviously in dollars we're talking about $100, $1,000. These numbers will get completely omitted if you're checking, because they all will become immaterial for us. But then understand, if you look at these numbers, they are also important. But then what will happen is, if suppose there are a lot of misstatements, okay, in these numbers, then what we do is we are going to pick up these, okay, we will aggregate all of them and see whether in total they are crossing materiality or not. This you do when at the time of performing the audit. So though we fix the material level at this amount, when we really do the audit, we begin from the lesser number, a lower number. So this lower number from where we start checking is going to bring the probability of a risk again down. So the probability of the audit risk will again come down because you begin checking from where a little lower level. So this lower threshold which you have kept, okay, maybe in my example, you kept 9,700. Okay. If you keep that to be your probability, that to be your materiality level, then you start checking for every transaction from this level. Got it? So this is considered to be what? Performance materiality. This is also done in order to understand if there are any uncorrected or undetected misstatements in this range. Okay, they also will get identified and overall the risk will come down. Okay, so when you talk about materiality, there are two important concepts to be remembered. One is at the planning stage, you have the overall financial statement level. Performance, we call it to be performance materiality, and this will always be below the overall financial statement materiality. Okay, then. Now, how do you assess the risk? What are the procedures? Very, very simple. You will be having procedures like you can inquire, you can perform analytical procedure, you do observation, you do inspection. Now, all these words have their own importance. Inquiry is when you take oral evidences. So when you're talking to the management, TCWG, to the employees, okay, and try to understand by them about any kind of risk which could be present. Okay, so you could raise questions to them. You can perform analytical procedures. Analytical procedures are where you do comparison between data and you try to find out if there is some kind of unusual trend, if the ratios are not matching with the given details, if there is significant changes in the ratio of the last year and the current year. Okay, then that also will enable you to understand if there could be a risk. Observation is visual, that is, you don't question anybody, you only observe things and understand. Basically, internal controls you understand through observations. Inspections are documents. So when you look into documents and all, you call the what to be inspection. Okay, or maybe inventory's condition also. When you pick up and you check it, you're inspecting the condition of the inventory. Okay, so these are the ways through which you will obtain the risk or understand the risk. So we call it to be risk assessment procedure. How does the auditor assess the risk? Then you have analytical procedure, a very, very important discussion. Okay, now analytical procedures simply means you will try to develop some kind of relationship between the financial statement, okay, items. There could be financial numbers, there could be non-financial data also. Okay, so basically a simple example to give you is that, for example, when you're checking payroll. Okay, so what you could do, you could have the details of the number of employees. You could also have average salary. These details will be available with you. Correct? Now you can check the salary payroll by to get the payroll slips are there. Then you have the cash book, bank statements are there. Everything is there. You can check and find out. Even then, there is one more methodology through which you'll be able to identify if risk is present. Could this number be wrong? And that is when you try to establish a relationship like this. So when you do this and you multiply and get a particular number, this number you can actually check with the financial statement figure. And when you check with the financial statement figure, you will see that obviously they'll not be appropriate, they'll not be accurate because it's average salary taken, but reasonably it has to match because it is average. Correct? Reasonably test to match. So this way you'll be able to understand whether really salary number is actually appropriate or not. So this also will enable you to identify what is risk there in payroll. Got it? So this is the way through which you'll be able to identify the risk. So that is called analytical procedure. You're trying to analyze the data by creating some kind of a relationship. Okay, or you do some kind of comparison. You create a trend, or you do some kind of ratio analysis. Like you have a ratio like GP ratio you can take. The last year GP ratio is 5%. Suddenly this year is 12%. So much change suddenly cannot happen. Or this year was 12%. Last year was 12%. Now it is 3%. Sudden changes like this do not look good. So these are all the indicators to the auditor. Yes, something has gone wrong. So this you will understand through what analytical procedure. The comparison could be done with prior period, like GP ratio. I gave example. Industry information, like if you talk about hotels, hospitals and all, you can compare with the industry information because uniformly the industry will operate with gross profit and net profit margins and all that. Anticipated results are nothing but budgets. So you can do the comparison with the budgets and check if there is some kind of misstatements. Okay. And one important thing is analytical procedures will be performed at all the stages. All the stages of auditors. Audit will have 3 stages. One is plan. Second is execution stage, which we call it to be performance. And then you will be having a reporting stage. Correct? Every place we perform analytical procedure. At the time of planning, we are doing it for what purpose? For risk assessment. At the time of execution, we are doing it as a part of substantive procedure. Like for example, I gave the example of your salary, right? Salary is nothing but you're doing detailed checking of the financial statement item. This we do as a part of performance of the audit. So that time also I can apply analytical procedure. Similarly, reporting. Before we prepare the audit report, just before we prepare the audit report, we are required to perform analytical procedures. Why? Because at the end of the audit, when all the conclusions, when all the evidences are available with you, even then you don't jump to a conclusion directly. It is very important that just to be double sure, you again perform some kind of comparison, you again perform some kind of trend analysis, you again do some kind of reasonable check, you calculate certain ratios just to double sure, just to ensure that whatever opinion you have got and whatever is actually the conclusion that you're going to draw or whatever analytical procedure are giving you result, whether everything is in line or not. So because of that, analytical procedure is performed throughout the audit. Planning also, execution also, performance also, and also before the end, that is conclusion period also. Okay, now, one very important thing for exam point of view of this particular topic is that students usually do not get the proper approach to be followed as a part of this topic. So here, when you look about exam approach, I've just picked up one very important idea so that you'll be able to understand how you have to read the question and understand how the answer has to be given. The approach is very important. Many students, what happens is when a question about audit risk is given, they start looking into the direction or in the mindset of the management or the company. No, you are who? The auditor. You are writing audit paper. So the questions are asked to you, you being an auditor. Don't look as a you're a businessman. No, you are who? The auditor. You have nothing to do with the profit figures. You have nothing to do with the increase in the profit, decrease in the profit. Nothing has to be done. You are in the position of the auditor. You have to talk only with requirement of your audit. That means whichever situation is given to you, in that, how will your audit get affected? That should be your approach. Many students do a mistake that when they talk about, some kind of misstatements, when they talk about some kind of misleading information and all, they start thinking in the management perspective. This will affect the business in this manner. This will affect the profit. This will affect the net profit ratio, GP ratio. No, that is not the requirement. We are the auditors. We are answering, keeping ourselves in the shoes of the auditor. We are not owning the business. We are not the management. We are not the entrepreneurs. Who are we? The auditors. So basically, we have to give the answer in the form of an auditor. So when they give you about some overstatement, when they talk about understatement, then what should be our approach? Yeah, overstatement means the auditor has to perform the further audit procedures and ensure what is the overstatement about. Tell the management about the rectification. If they do not do it, then we go for modification, how it will impact the audit report, what kind of risk would be present because of this overstatement, what could be wrong. Like for example, if they have written overstatement of sales is there, then in that case, you will perform procedures to understand really if there is overstatement or not. So you can go for external confirmations, take inquiries from the debtors, check the bank statements and all that. So basically, you have to understand that you are answering in the point of view of the auditor and not the management. Do not give the answer that because sales are overstated, profit figure will be more, because of which the financial statement will give a misleading information. No, nothing to do with the profits. We talk about what will be the reporting requirement of the auditor. All right. So let's see this. Always focus not on the business risk, but you focus on audit risk. Business risk, management will look into. Audit risk, auditor will look into. And we are writing the paper as if we are auditors and not the management. Risk identified. Now, our example is given here. One of the risks identified during the course of audit is customers are struggling to pay the debts. Now, customers are unable to pay the debts. That means if customers are unable to pay the debts, you will have what? Irrevocable debts. That means there are going to be bad debts. So according to the auditor, you are going to look into the financial statements. Financial statements, what will be affected because of bad debts? It is what? Debtors. So you will have a problem that yes, debtors could be overstated because there is a possibility that there could be bad debts for which provision has to be created. This is financial statement perspective. But what will the management think? Management is the businessman. So the businessman will think that yes, if there is struggling in paying the debts, that means this will impact on my profit figure. If they don't pay, I'll have losses. That will reduce my profit and all that. Correct? That answer will not be yours. Your answer will be receivables will be overstated. That means debtors will be overstated. Business risk. What is the management will give the answer? Irrevocable debts may arise, reducing the profits. Got it? So the approach in writing the answer should be very, very clear. So you should step in the shoes of the auditor and not that of the management. All right? Okay. Now, moving to the next one. The next topic to be discussed here is regarding planning. One of the easy topics, but yes, examination has a very good weightage. So because of which this also becomes important. Now, as I told you, like any other subject or any other thing in your life, even audit is a very important exercise that you're going to do because it's a major responsibility on you where stakeholders are going to rely on the opinion that you're giving. So that cannot happen without planning. Okay. So here planning, first of all, what is the concepts here? So these are all the concepts that we study as a part of this topic. Okay. What is the purpose of planning? Very simple. In order to obtain sufficient appropriate audit evidences. Okay. See, audit always understand you have to obtain sufficient appropriate audit evidences by performing proper procedures. And how do you decide when what procedure has to be performed? When you'll be able to plan it properly. So in order to perform proper procedures, in order to obtain sufficient appropriate audit evidences to give opinion on the financial statements, you will do planning. Correct? Okay, that is in planning, we have ISA 300, planning and audit of financial statement. Okay, then what is the benefit of planning? That is quite an easy way to understand. First of all, you'll be able to give attention to all the important areas on timely basis because once you understand the entity and when you're planning about it, you will be able to understand what is the nature of the entity, which could be the risky area and all. So you'll be able to plan very well. Then all the problems could be identified on timely basis because the way in which you have planned looking at the risky areas, all the problems will be identified timely basis. You'll be able to complete the audit in a very effective and efficient manner. You will be able to select the team members appropriately, taking into account their capabilities, their competence. Direct and supervise, that means the engagement partner will be able to direct the team properly, supervise it properly, and there'll be absolute coordination of work. Okay. Only when planning is there, all these things will be there. Otherwise, audit will be a failure. And because it's a major responsibility, we cannot play with it. Proper planning has to happen. And the benefits of planning are all of these. Okay. Then. Now in audit, we talk about two different topics when it comes to planning. So when you discuss about the standard ISA 300, which basically talks only about planning, okay, it talks about two important concepts. One, it talks about audit strategy. Other, it talks about audit plan. Now, strategy is something which is a broad framework. So basically, regarding the main characteristic of the engagement, what is the reporting timeline, when the report has to be submitted, when what has to be done, what is the objective of the reporting, how much resources will be requiring, how much is the nature, timing, and extent of the resource required for the purpose of performance, all the significant matters, preliminary engagement activities, all of these things we actually do as a part of strategy. Once the strategy is in place, then we do planning, and planning is going to be detailed. So the overall planning or the overall understanding of the audit is called as strategy. That means the basic timeline. Okay, within 20 days we have to do. We have to provide. We are looking into the financial statement of so and so company. Okay, this is the objective. So many resources are available. So we have to delegate so many people. Okay, preliminary engagement activities have been completed. Independence, all of that we have checked. All that is what broader framework. So that is called as strategy. Now, once the strategy is ready, we know we have 20 days timeline, we know reporting requirement or reporting timetable we have with us. So many resources are there with us. Now what we do, we start doing a detailed plan. Detailed plan means when we will do, who will do, how it will be done. Okay. Everything in detail, we go for it. We call it to be audit plan. Correct. So if you look at it, first you create an audit strategy where characteristic, reporting timetable, objective, NTE of resources, not the procedures, resources. Then significant factors, preliminary engagement activities, everything will be taken care of as the audit strategy, a broad perspective. Then plan will be very much in detail. We're looking at the resources, the characteristic, the reporting timeline and all. You'll see what will be done, who will do, how, when, everything will be decided in detail. So first you'll have strategy, then you'll have plan. Okay, which is more detailed, planning will be more detailed. Correct? And these both are flexible, both can undergo changes. Okay, then comes to interim audit and final audit. Interim audit and final audit. Interim audit basically is suitable for large organizations because at the year end, after the books of accounts are closed, it is impossible for you to actually take up the entire audit and close it within the given timeline. So what they do is the audit will be conducted throughout the period. Throughout the year, okay, during the accounting period itself, on regular basis, maybe weekly or fortnightly, the team will reach the client's location and regular checking of the documentations and the vouchers, invoices, everything will happen on day-to-day basis. That is not day-to-day, weekly, quarterly, it will be happening. Okay, so this will be happening throughout the period, year. But final audit is the audit that will happen only after the books of accounts are closed. Okay, this will be suitable for small, okay, and this is for the large organization. Both have their own advantages and disadvantages. Okay, that is interim audit and final audit. However, even after interim audit is done, in final audit, you have some additional procedures to be done, like subsequent events are there. Okay, all of these like going concern checking and everything, compulsorily you have to perform. So only if you do interim audit, you cannot say that the audit is completed at the 31st December or March, whatever. That will not be done. Final audit will have its own extra steps which you have to follow. Only then audit will be completed. Okay, then. Very important discussion, fraud and error. What is fraud? Obviously intentional, when willfully the management or the employees are doing some kind of misstatements in the financial statement, they are doing misappropriation of the assets, then that is the case where we say it is fraud, intentional. Error is going to be because it's all human beings who are going to handle the business, and human beings are prone for human errors because of a lot of things like you have, the mood swings are there, tiredness is there, fatigue, all of these things will affect the, the competence or the effectiveness of the people, and because of which error is very common. You cannot have something free of error. Free of fraud we can expect, but free of error will not expect because human errors will always be there. Okay, then that means misstatements could be because of both fraud as well as error. Then we have a standard which is very interesting and very important, ACCA 240, which talks about fraud. This particular standard talks about auditor's responsibility in relation to fraud. So the idea behind this is very simple. The primary objective of the auditor is only to obtain reasonable assurance that the financial statements are free from material misstatement. However, during the course of audit, if the auditor comes across a misstatement, okay, and he has an indicator that they could be because of fraud, then in that case, obviously the auditor has to do further audit procedures, identify what is the risk, identify and understand what are the misstatements, are they really fraud or not, then respond to it correctly. And then also if it is having an impact on the audit report, reporting has to be done accordingly. So all that is covered by ACCA 240, which tells the auditor there are two types of frauds very important to the auditor. One is fraudulent financial reporting, other is called a misappropriation of assets. So these two with respect to the financial statement which we are concerned about. So auditor becomes very, very clear about these two types of fraud not being present in the organization. So obviously when he's doing the audit, if he comes across any fraudulent financial reporting like overstatement, understatement, omission, okay, writing something which is without any base, okay, these are all dummy entries and all. These are all considered to be fraudulent financial reporting, overstatement of the inventory, okay, all of these are what reporting is done wrongly. Misstatement of the misappropriation of the asset is where stealing of the assets could have, embezzlement of cash could be there, correct management using the assets for the personal purposes. All of these are misappropriation. So if the auditor comes across any of these indicators, then obviously he has to perform further audit procedures, identify the risk, evaluate the risk, respond to it appropriately, and if required for reporting purpose, he has to report as per the ISA 240. Correct? Okay, obviously fraud, if it has not been disclosed by the management appropriately, not rectified and all that, then you go in for modified opinion only. Okay, then you have one more topic here, that is fraud risk factors. Fraud risk factors simply means what could be the reasons why people commit fraud. So that is called fraud risk factors, why people commit fraud. It could be incentives, pressure from the management, it could be some moral obligations, it could be attitude of the person. However good atmosphere you have, if the person is having the quality only of committing fraud, then the rationalization behind the act is not there, so obviously you commit fraud. Correct? So these are called as fraud risk factors. So as per 240, you will assess the risk of fraud. You will check for the fraud risk factors, check if there are any indicators. Indicators could be any kind, like I told you the examples like fraudulent financial reporting and all. Then examine them in detail and then respond appropriately, that is prepare the report accordingly. Okay, then. Next is regarding laws and regulation, for which we have ISA 250. ISA 250 talks about consideration of laws and regulations by the auditor. A very simple standard to understand. The key requirement of the standard is that, first of all, ISA 250 clearly tells about laws and regulations, and understand very clearly, management alone will be responsible for the compliance of laws and regulation. It is thorough responsibility of the management to comply with all the laws and regulations which are applicable to the entity. However, it is auditor who will be responsible to ensure whether there has been a proper compliance of all the laws and regulations of the management. Now understand, we as the auditors are concerned only with financial statement. So we will look into only the compliances of those laws and regulations which have an impact either directly or indirectly on what? Financial statement. So any law which is the non-compliance of which is going to affect the financial statements, whether directly or indirectly, then in that case, definitely we are going to check for such kind of non-compliances. And if we come across such kind of non-compliances, then we are going to communicate it with the management, TCWG, and ask them for the proper compliances. If they do not do it, that will definitely go in for a reporting. Okay. Compulsorily understand, whenever it is management's responsibility, you have to obtain written representation from the management. Okay, then. Moving on to the next one, that is ISA 220, quality management or quality control management, firm to maintain quality control policies. Now, what is that telling? See, we are talking about the sub-top chapter planning. Okay, planning is done why? So that efficiently and effectively audit is conducted. So for the purpose of conducting the audit effectively and efficiently, every audit firm, every ACCA firm will have its own set of policies. Okay, based on these set of policies, they will do the audit. And after these set of policies have been complied and the way in which they're doing the audit has been as per these policies, only then we say the audit is of quality. So in order to maintain the quality of the audit, every audit firm will maintain their own quality control policies. And these quality control policies, the engagement partner will take care of that these policies have been properly adhered to with respect to every engagement that the auditor takes up. So whenever the auditor takes up any engagement, then the partner, okay, the engagement partner or any other partner of the firm or maybe external party, what they will do is they will see whether that particular engagement is actually complying with all the quality control policies or not. Okay, so basically they'll have a checklist with respect to these quality control policies, and whenever any engagement is done, they will check whether all these policies have been adhered to or not. So they will have a policy with respect to ethical requirement, like basically independence. So if there is threat to independence, how safeguard measures will be taken. Okay, all of that. Then resources, how they allocate. Okay, whether they take up the engagement after understanding they have adequate resources or not. Then how do they perform the engagement? Monitoring and remediation, that means whether when the engagement has been performed, whether it has been properly monitored, wherever there is any problem, there is difficult situation, how it has been remedied. Okay, all of that. Then you have very important concept called as engagement quality review. Okay, this is nothing but when basically this is for listed entities. In listed entities, what happens is after the audit is completed, okay, maybe A goes to do the audit of Apple. Okay, then what happens is when A does the audit, it is a listed entity. So what happens is they have to actually After finishing the audit, they directly cannot submit the report. No. Here, A, if it belongs to a firm, now A, B, and C are partners. What will happen? This particular partner, when he does the audit, it is again been reviewed by another partner. Okay, to ensure that this audit has been done correctly or not. So whether audit has been done properly or not, the other partner will check. Okay, this is called engagement quality review to ensure that the quality of this audit is maintained. Got it? So this review, just to ensure that the quality standards are maintained, we call it to be what? Engagement quality control review. All right. This is done within the firm by another partner, the partner other than the one which performed the audit. Okay. We have done a detailed discussion. When you go through the syllabus in detail, you'll see all of these things have done exhaustively. Okay. Then last part of this particular chapter talks about audit documentation. Now, audit documentation, you have ISA 230. Now, what does ISA 230 talks about? Documentation, in other words, working papers. Okay. Now, working papers are what is the purpose for maintaining working papers? In audit, we have an understanding what you have not written is actually you have not done only. So basically, any and everything you do, whether it is plan, whether it is procedure to be performed, whether it is evidence you obtained, okay, whether any kind of communication you had, whether any kind of conversation with TCWG, whatever, be materiality of yours, whatever you have decided, everything will be written on a paper. So it's an evidence that the audit was done as per the standards on auditing, that is international standards on auditing, and the audit was done as per the requirement. Okay, so it is an evidence that audit was done in the right direction. What will be the content? I told you every single thing, be planning, be performance, be evidences, be reporting, be all the documentary evidences, whatever you get, everything will get what? Recorded. Custody. Who will maintain the custody of the working papers? The auditor. It has to be in safe custody because it is very, very confidential information which cannot be revealed to anybody. So the auditor has a kind of ethical code governing to him. That is a fundamental principle which is governing on him, which talks about confidentiality. So whenever the auditor maintains this particular data, okay, the working papers of the client, the custody should be keeping in a safe custody. It has to be properly safeguarded, proper measures you have to take to protect it. It has to be not tampered. It should not be in the hands of anybody else. Nobody should get access to it. So the custody is with whom? The auditor. Retention, very, very important. As per ISA 230, compulsory the auditor is required to maintain the audit working papers for a minimum period of 5 years from the date of signing the audit report. Understand, this is given by the international standards on auditing, but every individual country has its own. So in India also we have SA 230 which talks about documentation. In India, this particular timeline is 7 years. Okay, so every country has its own. So basically in international standards on auditing, the timeline is minimum 5 years. From the date you sign the audit report, you have to maintain for a period of 5 years. That's very, very important. Okay, so that is regarding audit documentation. Retention is very important. Retention simply means you cannot discard it. Okay. Then we take up the next one, that is evidence. Okay. Now, this is the third chapter here covered in this particular grouping that I have done. Okay, about risk assessment and planning. The third chapter covered here is evidence. Now, evidence is the most important requirement for audit because whenever the auditor gives an opinion, okay, this opinion is based on the conclusions that he draws. And these conclusions come from where? The evidences that he obtains. Correct? So this topic is talking about what? The evidences. So the auditor has to follow proper audit procedures in order to obtain evidences which can support the conclusion based on which the opinion will be given. Correct? Now, here we have ISA 500, which talks about auditor is having the responsibility to design such procedures which will enable him to obtain sufficient appropriate audit evidence. Understand, we are not required to obtain only audit evidence. We are required to obtain sufficient appropriate audit evidence. Sufficient appropriate audit evidence only will enable the auditor to give reasonable assurance. Okay. Sufficient talks about quantum. Okay. And appropriateness talks about quality. Okay. What is quantum? You should have so much of evidence which is enough for the auditor to tell, yes, I can say it is not misstated. I can say it is misstated. So the quantity, the amount of evidence or the number of the evidences that you have should be sufficient enough. That is called as what? Those many number of evidences you have to obtain which are sufficient to prove the particular matter. Appropriate means relevant. So about the relevance, okay, when you're talking about overstatement of debtors, what could prove the overstatement? That is called as what? Reliability. Okay, so relevant is important because that is talking about the quality of the audit evidence. So depending upon what kind of evidence you're obtaining, you will look into whether it is sufficient enough and whether it is appropriate to the given assertion that we are finding out. Okay, so two important things: sufficient and appropriate. Where sufficient talks about quantum, appropriate talks about relevance. Okay, then reliability of evidence. Now, which evidences would be more reliable than the other? Very simple discussion. Oral evidences, written evidences. Obviously, more reliable will be written evidences. Second, evidences which are directly obtained by the auditor. Are they more reliable or obtained through the management? Obviously, obtained directly from the auditor. Third, if it is obtained from the independent source, is it more reliable or obtained from the internal management? Obviously, independently. But you can definitely believe on the internal management also if the internal controls are strong. Fifth important point is what? Original documents are always more reliable than photocopies or maybe digital. Correct? So always going for original. So reliability says written is more reliable than oral. Management and auditor directly obtained by auditor is more reliable. If you talk about independent source or through the internal management, independent source will be more reliable. You can believe on the internal management if the internal control is strong, and always understand original will be more relevant than photocopies. Okay, so that is regarding reliability. Now, then there is an important term in audit which we call it to be assertion. Now, what do you mean by the word assertion? Assertion simply says whenever the management tells something, whenever the management is representing something, that is considered to be assertion. For example, let us take a balance sheet. Now, in balance sheet, there is a building. The building is, let us take 1 crore. Let us take in rupees 1 crore. Okay. Now, here, if in the balance sheet, which is prepared by the management, if building is appearing at 1 crore, it simply means that the management is telling the auditor that building is there, building is existent. We own the building, so we have the right over the building. The value of the building is 1 crore. Okay, it is complete in all respect because all the buildings are taken into account, so it is complete. Correct? Now, understand all of these things you understood only by looking into building 1 crore. These all things in audit terminology, we call it to be assertion. So audit is what basically, audit is telling that whatever assertions are made by the management, whatever assertions which are made by the management, the validation of that is done by the auditor. So this validation of the assertion is nothing but what? Audit actually. Got it? So what is assertion? Assertions are representations made by the management, whether express or implied. Express was building and 1 crore. Remaining all were implied, like ownership is there, completeness is there. These are all what? Implied. So whether it is expressly given or it is understood, okay, these are considered to be assertions. So for transactions and events means P&L account items. And when you talk about account balances, you talk about balance sheet items. So these are even for disclosures. Okay. So when you talk about transactions and events, you have a list of assertions like occurrence is there, existence, occurrence is there, completeness is there, measurement is there, accuracy is there. Okay. All of these are for transactions and events. Account balances, as we discussed, rights and obligations, existence, ownership. Then you have ownership and rights is the same. Then valuation, completeness, all of that. Okay. Then source of evidence. How can you obtain evidences? By performing test of controls and by performing the substantive testing. Test of controls is nothing but you're going to check on the internal controls. Correct? And substantive testing means each and every item of balance sheet and P&L we pick up and we check for every assertion. Whether valuation is correct, whether it is existing or not, whether it is owned by the entity or not. Okay, then whether there is any kind of mortgage created on it, whatever. So everything connected to that, when we do detailed checking of it, we call it to be substantive testing. Okay, that is the way through which you'll be able to obtain evidences. Then, what are the types of procedure? Now, if I want to check the test of, if I want to check the controls, so if I want to do detailed checking of salary, wages, purchases, sales and all, how can I do? Inspect the documents, observe. Okay, I can do recalculation, I can do reperformance, I can perform analytical procedures, Correct? There are multiple things that I can do with respect to performing the procedures. Okay. So there are multiple ways through which I can perform procedures for checking controls and doing the testing of details. These are procedures could be these. Here you can add recalculation, reperformance could be there. Analytical procedures could be there. Okay. External confirmation you can obtain. So there are multiple things that are there. Okay. Physical verification you can do. So these are all the ways through which you can obtain the audit evidences. Then analytical procedure as substantive procedure, as I already explained it to you. Whenever you check the P&L account items, balance sheet items, you can perform the analytical procedure. Rather, I would say one of the most reliable procedures that you have, that is analytical procedure, where you'll do comparison, okay, between the data. You can create trends. You can calculate certain ratios. You can do some kind of reasonableness check. Okay, some statistical tools you can use. Okay, data analytics and all. So based on that, what you will be able to do, you'll be able to perform the analytical procedures. Okay, as a part of substantive procedure to identify if there is a risk of misstatement in the P&L account and balance sheet items. Okay, then. Now we have here three important things. Three important things become three important discussions as a part of this topic. ISA 500 talks about relying upon management expert. Now, there are multiple things in the financial statements which are done by the expert, but this expert is not taken by the auditor. It is by the management. Like, for example, when you talk about taxation provision, you can go for the expert and the management takes the opinion of the expert. Then if you have a lawyer and if the legal case is going on, whether provision to be created or not, or the amount of provision, you go to the expert and get it. Buildings under construction, you get the expert statements and you value it. So based on that, you'll be having multiple places where the management will go in for using the expert's work. So auditor, as a part of doing the audit, when he comes across these things, like for example, closing stock in case of jewelry and all, so those also will be done by experts only. So in that case, it is the duty of the auditor to decide whether he wants to rely on the expert's work or not. See, whatever the auditor does at the end, opinion responsibility will be only of whom? The auditor. So he has to be double sure always that whatever he does at the end, opinion, whatever he gives, he alone will be responsible. Correct? So here we talk about management expert, and because it is coming from the management, it is covered by ISA 500. It is a direct audit evidence that we have. Correct? Now, here, obviously, whenever you go for management expert, directly you cannot do it. This particular standard says even if you want to use the work of management expert, you have to look into his competence, the source through which he's done his work, whether he's having the capability. Okay, does he have that expertise, knowledge? Is he the expert in that field or not? Get an understanding about his capabilities, competence, everything. Only then you can use the work of the expert. Then, second is when auditor will hire his own expert or employ his own expert. So in that case also, we have a different standard called ISA 620, which tells using the work of auditor's expert. Now, as I told you, whatever work auditor does, at the end, auditor alone will be responsible. Correct? So it is very, very important for us to understand that auditor has to follow certain procedures in order to believe and be sure whether he has to use the work of the expert or not. So there also he's going to look into the source from where the expert is going to take the content or use the assumptions, or whether the expert is having the competence or not, the field of expertise of the expert, okay, whether he really has the relevant knowledge, skill, is he updated, okay, all of that. So understand the competence, capability, skill, everything about the expert, only then use the work of the expert. Also take in writing of the expert that he's going to maintain the confidentiality of the data. That also very important. Then you have relying upon the work of internal auditors. Now, usually big organizations, especially listed entities, you have a separate department altogether called as the internal audit department. This internal audit department, okay, will have internal auditors, okay, they'll be working for the company. Okay, internal auditor is nothing but internal appraisal, like management's function it is. Okay, so auditor, if suppose while doing the audit, the internal audit report is already available, then can he use the internal audit report for his work, for the performance of his external audit? Can he use the work of the internal auditor? The answer to that is yes, because ISA 620 allows the auditor to use the work of the internal auditor, and the work of the internal auditor is nothing but the internal audit report. Correct? Now, obviously, when you use the internal audit report, obviously directly you cannot use. So there also you have to evaluate the capability, competence, okay, how systematically they carry on the work, how good is the internal audit department of the client, are they regular, systematic, disciplined approach, what are they capable enough in the way in which they're functioning and all, what is the size of the particular department, is it commensurate with the business size, all of that you take into account and then decide whether to use the report or not. At the end of the day, external auditor alone will be responsible for the opinion that he's giving. Apart from that, ISA 610 also talks about one more situation where if you do not want to use the work of the internal auditor, you can directly use the help, or you can take a direct assistance of internal auditors only. So one more option available with you is, instead of taking the report, what you do, directly take the help of the internal auditors. But now internal auditors are working for whom? The company, the management. So obviously you have to take an agreement from the management that you are going to take the assistance of the internal auditors. And when you are going to take the work of the internal auditors' help, that we are going to take their help, that then the management should not interfere in that workflow. That means the auditor, external auditor, will directly monitor the internal auditors. The management will not interfere. This you will take in writing from the management. And also you sign a confidentiality statement with whom? Internal auditor, telling that they will not reveal any of the information that they've obtained during the course of this audit to whom? The management. Okay. So these two agreements are very, very important before you take the direct assistance of the internal auditor. Understand the word direct assistance. That means management cannot interfere here. Correct? Then you have use of service organization, that is ISA 402. Here it says that, what is the meaning of service organization? Suppose the company is A Limited, whose audit you are going to do. A Limited, a part of its activity, they have outsourced to B Limited. So maybe the maintenance of payroll or maybe inventory is outsourced to whom? B Limited. That means one major part of the financial statement, one of the major item in the financial statement, one of the major amounts of the financial statement, the evidence of that or the calculation of that is done by whom? A third party. This is a service organization. This service organization, when they are going to calculate the amount, and this amount we are going to evaluate, don't you think the auditor is going to look into, okay, this service organization's work also? Yes. So what the auditor will do, they are auditors of the user entity, that is the A Limited. So first auditor will go and ask A Limited about the internal controls of B Limited, how do they process the work and everything. If A Limited provide the answer to the auditors, then fair enough. But usually if suppose A Limited does not perform, then in that case, the auditor cannot say we don't have any evidences, we cannot do anything now. We do not know how the payrolls are calculated, the controls are there or not there. We do not know. This particular standard ISA 402 allows the auditor or gives the responsibility to the auditor that they can actually approach the service organization and get the details from them. Get the details how? You can ask for type 1 or type 2 report, which will be based on the internal control systems of the particular organization, which will be prepared by the management. That is their user, this auditor will prepare a report, okay, and the management of this company will give it to the external auditor. Or maybe this auditor, external auditor, that is, we can actually go to the service organization and check by ourselves. Or we can, send another member, okay, and another auditor to go to the particular location and check for the internal audit, internal controls. So there are multiple ways available with us through which we can perform the additional procedure and get this understanding of the controls operating where? In B Limited. So that is covered by which one? ISA 402. Correct? Then comes to sampling, a very important part where we talk about statistical, where we talk about audit is always performed on less than 100% of the transaction. And this procedure, we call it to be sampling. It is done in every audit. Be small organization, be big organization, immaterial. It is always important, or it is always understood, 100% of the transactions can never be checked. So the audit always happens based on sampling. So we have ISA 530, which talks about audit sampling. And it says when the audit procedures are performed on less than 100% of the transaction, the procedure is considered to be audit sampling. Here we call, here to talk about in detail about the types of sampling. One is statistical sampling, other is non-statistical sampling. In statistical sampling, we are going to use some kind of probability theory, some kind of scientific techniques where we use random number table, where we talk about monetary unit sampling, systematic sampling. So we have some kind of statistical tools available through which samples will be picked upon. Like, for example, we have random number table where we can use this particular app on the mobile phone also, or on the Excel sheets, we can put the random numbers. So if you have 100 units, you can put a formula telling 20 items out of 100. So randomly, the computer generated units will appear and randomly 20 will be picked up. So this is statistical. Non-statistical is where the auditor will not use any kind of, statistical method or scientific method. Randomly, they'll pick up. So there is no proper judgment, or there is no proper judgment is obviously involved, but there is no proper scientific understanding to it. It is the experience of the auditor that has been used here. Okay, so there is non-statistical where you can talk about block sampling, haphazard selection. The name itself says anyhow they selected. Obviously, experience will matter of the auditor here. Then the last part of this particular topic talks, but before that, you have one more important topic here, which I skipped writing. It's about sampling risk. Okay, I didn't skip because we already discussed as a part of risk assessment. Sampling risk is an important discussion here. The risk is nothing but auditor gives wrong opinion. Okay, and this risk is happening because of wrong sample. Okay. So when you choose a wrong sample, you call the situation to be what? Sampling risk. So the samples here in my example, out of 100, you chose 20. 20 are all correct, but the actual statements are in the remaining 80. So because of 20, what you said, they're true and fair. Correct? But the actually things are what? They are wrong. So this opinion that you're giving true and fair, where actually the financial statements are misstated, this is the risk which has happened because of choosing a wrong sample. And we call it to be what? A sampling risk. Okay. So this is the concept of sampling risk. All right. Then the last part here talks about the automated tools and techniques. Today, the entire world is computerized. Today, all the big companies are using computer softwares. Very rarely you see any kind of manual accounting, any kind of paperwork. Actually, their physical papers are not there. So when things are only not available physically, how are we going to perform the audit in the traditional approach of actually going and picking up the papers, sticking them and all that? That is not going to happen. So even audit will be done how? Through automated techniques. That is, you'll be having data analytical tools. You have the CAT, computer assisted audit techniques. So these are all softwares which have been designed, okay, for the purpose of doing the audit. So the entire audit procedures have been performed through these particular systems, okay, the softwares. So the details of the softwares, we have done it in exhaustive manner. So we have covered the advantages of it, how the usage will be done. See, the procedure will remain the same: planning, assessment of the risk, choosing the sample, applying the procedure. Basically, CAT, what it will help you in choosing the sample, extracting the data, understanding about the misstatements and all this will be done using technology. That's it. Otherwise, methodology concept will remain the same. Only the route through which you're doing will now become computerized instead of manual. So that is done to CAT. Data analytic tool is today very, very common, a biggest field you can call in technology today, where it helps you in segregating the data properly in order to choose proper samples, to understand the data, model the data, do some kind of trend analysis, make some meaningful information of the data available. Okay. So a lot of analysis you can do using these kind of tools. So there are data analytics and CAD, that is computer assisted audit techniques. All right. So these are all the things that we actually have a core understanding when you talk about this particular topics. So we have seen through 3 different topics today. Okay. As I told you, they're chapter 5, 6, and 7 from the study text. Okay. This PDF, I'll make it available to you. So whichever things I've picked up, you can have a cross reference with the study text and you can see that every single aspect I've covered upon, and I've given you a summary of all of it again. This will enable you to recollect this topic properly. And then when you go through the entire detail again in the study text, trust me, when you're reading it, you'll be able to recollect the concepts very easily. Okay, and you'll be able to remember the discussion as well. Okay, so every single aspect, every concept has been picked upon, every standard related to that particular topic I have touched upon, and finally we took up the evidence also. Okay, so just for a quick glance here, if you look at the risk topic, the standards that we spoke about was ISA 315. Okay, you actually bring it here only, components of audit risk. It is ISA 315. Then you spoke about professional skepticism, which is spoken about in ISA 200. Materiality, we have ISA 320. Analytical procedures 520. Okay. So here 1, 2, 3, 4 standards have been picked upon. Okay. Then if you look at the planning, first I told you, you have ISA 300. Correct. So 300 talks about planning. Okay. Then planning, we broke into strategy and audit plan. And then we spoke about fraud and error, where about fraud is spoken by ISA 240. Then you have multiple other standards covered here regarding laws and regulations. We have 250. Okay. And quality control is 220. Okay. So here also we have covered, and documentation is 230. So here you have ISA 300, 240, 250, 220 and 230. Okay. Then you have evidence. In evidence, we spoke about 500. Then we spoke about 330 also, because this parts come as a part of response to the assessed risk. That is covered by 330. Then you have 620 auditors expert, 610 internal auditors, 402 when auditor is going to use the service organizations reports. Then 530 is sampling. Okay, so that is all regarding the coverage that we have about the first part. So if you look at the subject overview with which I began, okay, we have actually covered the first part of it. Okay, so as I told you, when I'll be taking in sequence, this part we have actually taken through. Okay, and as I told you, for descriptive, okay, very important. All right, and one more important thing here, if you look at the sequence, this part we have completed. All right. Okay. So with this, we'll stop the session here. And with the same approach, we are going to continue with the next one, that is regarding internal controls, where we'll be taking up two topics. One is going to be internal controls and systems, and second is going to be regarding the internal audit. This is comparatively much easier when we talk about planning and risk assessment. All right. So with this, we'll stop the session here. We'll continue in the next class. Thank you.